South Africa's economy grew at its lowest pace in 4 years in 2024, with gross domestic product expanding by just 0.6%, down from 0.7% in 2023. The sluggish growth was driven by logistical challenges, weak consumer spending, a severe drought that we see devastated the country, and declining fixed investments. Now, while a modest recovery in the fourth quarter provided some relief, structural issues continue to weigh heavily on the country's economic prospects, leaving our policymakers and investors looking to upcoming fiscal measures for solutions. We're being joined by Professor Waldo Krugell, who's an economist at the Northwest University. Thank you so much for joining us on the show, Professor Krugell. We can't hear you.
Good morning. Good morning.
Okay, yes, we can hear you now. So, South Africa's GDP growth slowed to 0.6% in 2024, and that was said to be the weakest pace in about 4 years. What factors would you say are responsible for this sluggish growth that we witnessed, and how do they compare to the broader trends in emerging markets?
I think the immediate factors were the ones that you already mentioned. The drought played a role in the last summer's harvest. Logistics issues were a big part of the story as well. Just moving exports out of the country was tricky and costly. And I think the fundamental reason, though, is very low investment. We know that investment's been low in South Africa for some time. Some of it's linked to policy uncertainties, and the end result is the economy growing much more slowly than it should have, particularly considering that this was a year with very little load shedding. There was a successful election, and added on to that, we also started easing interest rates. And even with all those positive contributions, it turned out that we could hardly grow faster than the year before.
Okay, so you are pointing to policy deficits. And looking at the critical sector, that is agriculture, only 3 out of 10 sectors contributed to growth. That's with agriculture contracting by 8%. Now, what underlying issues actually led to such a sharp decline in agricultural output? Does it have to do with policy interventions too, or some other challenges that we are not privy to?
I think in the agricultural space specifically, it was a weather story. The last summer season ended up much drier than expected, so particularly grain harvests were not what we hoped for. And added on to that, some of the other industries like fruit and specifically citrus, they struggled to get their exports out of the country due to the logistical challenges. So even if the prices in the markets were slightly better, they didn't have an easy time doing business due to all these many other constraints. There were also some animal diseases that played a role with bird flu and also foot and mouth disease for cattle. So all of those, I think, added up together to the detriment of the agricultural sector.
Well, in this, we still saw household consumption increase by 1% in quarter 4, quite mild, I must say, driven by a lower inflation, interest rate cuts, and let me say, early access to pension savings. But then, how sustainable is this?
It's not sustainable. At the moment, all those drivers are going to disappear very soon. It doesn't look likely that we're going to lower interest rates much further this year, maybe another 25 basis point reduction, and that's not a lot. And people can again access the savings part of their pensions, but they really shouldn't. They are only borrowing the money from their future selves, and you don't want to eat into that final pension that's available. So as drivers of consumption spending, both of those are rather limited going forward. At least we have inflation relatively low and stable. So if that can stay that way, it does provide a little bit of relief to households. But we can't expect households to drive the growth of the economy. We need investment, and that is what it's lacking at the moment.
Okay, so when you aggregate all these situations and you tie it around the high unemployment rate and poverty rates in South Africa, is there anything that points to economic recovery with Ramaphosa's reforms?
I think there are good signs that there is slow progress with some of the reforms, that would eventually ease these constraints to growth. For example, those logistical challenges have improved in the final quarter of last year. And if you chat to the users of the harbors and the rail system, they'll tell you there's some improvement, but there's still a long way to go. So I think once more of that gets into place, hopefully we'll see business confidence increasing, which feeds investment, which feeds growth, and we can really get a positive cycle going. But as everyone else, we're also subject to these international shocks, specifically the tariffs that President Trump's been talking about. So that causes uncertainty, and then again dampens investment. So it's not a straightforward path to growth this year.
And you think that those reforms will be sufficient enough to drive substantial GDP growth in the country?
It'll contribute, but the reforms in themselves cannot drive growth. The reforms should help to improve business confidence, to show that the reforms are on the way and there's progress being made. But if it doesn't feed through to confidence, we won't see the impact on private investment. And in the end, it's private investment that needs to drive growth.
All right. Now, the South African Reserve Bank cut interest rates by a total of 75 basis points in the second half of 2024 and January 2025. So, given the current economic conditions of the country, should further rate cuts be expected, or is there a risk of an inflation rebound?
I don't think there's a short-term risk for an inflation rebound. There's some upward pressure. We saw inflation increase slightly in January. But the big drivers, fuel and the exchange rate, they are muted at the moment, so not major concerns. But I don't think there are many cuts ahead. The Reserve Bank is keeping a close eye on the U.S. Fed and what's happening in the U.S. economy, and we'll probably follow them for different reasons, for guidance on where interest rates are heading. So maybe one more 25 basis point cut. But not at the March meeting. I think there are significant uncertainties out there, and the Monetary Policy Committee will be uncomfortable to cut rates while we still don't know how Trump tariffs are going to influence world trade, what the future of the AGOA agreement is, and all those. So we'll tread softly with the possibility that the rand could weaken on bad news.
Okay, so earlier you talked about the need for increased investment. And we know that the rescheduled budget for March 12 is expected to outline new measures for economic growth. So what specific fiscal policy tools should the government prioritize to stimulate fixed investment and enhance economic resilience?
The government, I think, has the clear idea that they need to invest in infrastructure, new and maintenance, but they also need to find ways to draw the private sector into this. The key is those mixed financing models, and I think if the minister can present some clear reform plans in that regard, that will already be a big signal. The budget itself is quite constrained, so there's not a lot of money to spend on new projects. Whether it's good spending or bad spending, there's simply not a lot of money around. But he would be able to signal progress and momentum with these reforms, which are often mostly regulatory and not linked to spending or taxes as the budget is. But if he can tell us a story of regulation reform and opening up the market for more private sector participation in the state-owned enterprises and the services they deliver, I think that would be what the budget can feasibly do.
And of course, we know that Bloomberg survey projects that South Africa's economy will grow by 1.75%, though that's a shortfall from the 3% target. And we know that there are equally global headwinds that South Africa is not actually insulated from. But then we hope that these policies, most of the things that you've mentioned, are the things that can actually provide economic stability and resilience for the South African economy. Professor Waldo Krugell, economist at Northwest University, thank you so much for sharing your thoughts with us.
Thank you.